You are up to a lot these days, and you're really focusing on rallying the financial community globally to act on climate. First, can you explain for our audience why climate matters to financial markets?
Well, I think for financial participants, it matters for three reasons. The first is risk. I've heard the earlier conversation and the references to the wildfires. If you think about extreme weather events, wildfires would be one example. But if you look over the last 3 decades, those have gone up 3 times, the number of them, the incidents. But the cost of that to the financial sector, principally the insurance sector, has gone up 5 times. And the uninsured cost has gone up 8 times. So there's huge risk in the actual manifestation of climate change. That's the first element of risk. There's also an element of risk or opportunity in the transition of where we are today to what Lucas was talking about, of where we need to get to, the changes to the economy. And that's the second reason why the financial markets care about this issue, is they see huge opportunity here, and we shouldn't forget that. If you look at the energy transition, reasonable estimates of what's required is that the investment in energy infrastructure is going to have to double for decades. That's $3.5 trillion a year of energy infrastructure investments for years and years and years. That is an opportunity. Think about 400 million new homes, let alone the homes, the retrofits or the refurbishment of homes that Rachel was talking about. So again, opportunity there, opportunity, new materials, new applications of technology, other aspects, and on and on. The third reason, though, why financial markets and participants care about this issue is responsibility. After all, they are investing or lending our money, all the people on this GZERO podcast and event and beyond. It is ultimately people's money. People care passionately about this issue, more and more about this issue. And the financial sector exists to serve their clients. The clients care, the financial sector cares, and they're really now getting behind trying to find solutions to it.
Well, we've ended up with a few Canadians on at this event. I'm Canadian. Mark, Jerry, you're both Canadian. And Mark and Jerry, I know you know each other well through your work together. Jerry, I'm going to hand it over to you to ask Mark a few questions.
Sure. And we decided that Lucas has from northern Wisconsin.
Anytime Lucas, you can come over the border. Officially, that's not true, actually, at the moment, for other reasons.
Yeah, officially, it's not true. It is a reflection of where we find ourselves globally, that Mark and I are about 6 kilometers away from each other and having this conversation pixelated. So it's a good place to start, Mark. So how do you keep people's focus on climate through this period? We'd speculated, I don't know if you heard the conversation before you got on, that it may have provided a good kind of opportunity to take a step back in the COP26 process. I think in any reasonable person's estimation, even assuming a positive climate outcome of the United States election, you weren't going to have an incoming administration turn around the American aircraft carrier ship estate in a matter of days. And plus you get, sometimes a little more time is just what the doctor ordered. So how do you feel about how COP26 is going?
Well, the first thing, just in terms of COP, the reason it was delayed, as Rachel said, partly just the mindshare logistics of it, as many things were delayed, the Olympics, other things delayed, but very much delayed to ensure that it's a high ambition COP. The UK presidency, in partnership with Italy and a huge number of countries, want this to succeed, so they want to take the time to make sure they get it right first. Secondly, I would say, and particularly what we're talking about in the private sector, Microsoft, one example, the financial sector writ large, is that there has not been, people have not taken their eye off the ball on addressing these issues. If anything, the focus on this has accelerated. You see the U.S. Business Roundtable announcement just today, and a host of things that have happened in the financial sector focused on finding this. I think the third thing that's hugely important, and kind of touch on something that Lucas said earlier, which is about what happens when you look to recover, or when you have a major event and you look to move forward. Particularly with the tragedy that we're living through right now with COVID, it is such a reset for society, but also for companies. There are relatively few companies who came into this event with a strategy that is perfectly online for the new world that's going to emerge on the other side because of the acceleration of digital, because of the importance of resilience, changes in supply chains. A number of factors have shifted. Business drivers have shifted. Now, when you're in a position, whether you're in the financial sector, in the tech sector, in industrial sector, service sector, and you're resetting your strategy in an environment where people are more and more focused about sustainability, about getting to net zero, well, and your governments and regulators and investors and banks are asking you what your net zero strategy is, you're going to have a net zero strategy, or you're implicitly saying your strategy is to wind your company down over the course of the next decade or two, while the world gets on with moving in that direction. So for all those reasons, there has been this focus during this period. It's a huge task. A lot more needs to be done, but thus far it's very encouraging from where I see it.
Want to give Lucas a chance to jump in here?
Well, I would just say, I think, following on from that comment, one of the things I've looked back at the past year, basically since January, and you realize that, the very first question I was asked was COVID and climate. How do you do both of these things at the same time? Well, since January, some of the most, monumental, significant climate commitments have been made and continue to be made. I mean, Mark, you mentioned this. During this COVID crisis, we've also, the private sector has been the sector that has been kind of moving the most rapidly, I believe, in ensuring that the answer to that question of what is your net zero strategy is, here's my net zero strategy, not I'm planning on winding down the success of my business over. By the way, I think that was the best phrasing I've ever heard about what the silence on a net zero strategy ultimately means. Because I completely agree. I think that we talk about, Satya, I think, does a fantastic job about talking about for Microsoft to do well, we need the world to do well. That's why, this enlightened self-interest that companies have to say, if we do want to do well, we don't want to wind down our success over time. We want to wind it up. And to do that, we need the world to keep doing well, and the best available science, the best available financial economic forecast. There's nothing that says the world's going to do well if we don't get it out ahead of this.
Yeah, and if I could ask you a question on that point, Mark, one of the most hopeful signs has been the acceleration in ESG investing through the crisis. And for a very long time, ESG was considered a late cycle luxury in the investment community. That's one signpost, but what kind of signposts can viewers look for to say, international financial markets are finally starting to get it, and they are moving in a positive direction for the climate? I know that's a lot of the work you're doing now for COP26, but maybe you could preview the kind of how do individual viewers or people concerned about the climate that we're moving in the right direction?
Well, I'm going to throw around a bunch of numbers that are, and they're all big. They're going to sound big, and they really are big, because we're going to
say it with numbers
finance that are bigger than global GDP. So if we were having this conversation in 2018, I would have said, look, there is $30 trillion in investment money that's dedicated to addressing this issue. That's now well over $100 trillion. That's how much has grown in the last couple of years. There's $150 trillion, and this is money from all the major banks, all the major pension funds, all the major asset managers and beyond that want this type of climate disclosure. In other words, what is a company doing? What's their current carbon footprint? And what do they intend to do about it? How do they manage it? Is there senior management compensation related to it? And so that's a phenomenal figure. And all of those tell you that this is moving from the fringes, not the fringe, to the mainstream. And the other important factor here is that the performance of companies across sectors, it's not just about the tech sector, although this is certainly true in tech, but across sectors where companies have put weight on environmental, social, and governance issues, demonstrable weight on that. they have consistently outperformed other companies. So this coming together of doing well by doing good, there is more and more evidence for it. So you see all of that now coming together. On top of that, society really saying that they want to see real progress towards net zero. And if I can say one other thing, because it came up earlier, and when Lucas was talking about Microsoft and sort of setting a path and also helping others to get to net zero, other companies, other countries to get to net zero. What's important here is there's a lot of low-hanging fruit, as you know, Jerry, and Lucas and Julia, on technologies that can be implemented. But there are some technological choke points that need to be addressed on carbon capture and storage, on hydrogen, on various other areas. But the good news is that as companies have plans, as they work towards those, it becomes more and more obvious what problems need to be solved, or to put it more accurately, what technologies need to go from uneconomic to economic. And more money will be invested in that, because a problem is a huge opportunity if the world's doing what everyone's saying they're going to do, which is to go to net zero. And that is a powerful, powerful dynamic. And last point, I said that was my last point, but now here's my last point, which is that it's an old central banker trick. But if government policy fills in behind this, then that will accelerate the process. As Lucas said, the private sector is doing a lot. It won't get there alone. But as policy comes in, and we've seen it in the EU, we'll see it in other jurisdictions, that will make a huge difference.
I have one last question, Mark, and then I'm going to toss it back to Julia. I guess at a very general level, can you give people a sense of why you remain hopeful about this, and what is your biggest concern?
Well, in terms of hope, I would say that we have, a lot on the technology side, not my expertise, but energy technology. There is a lot that is there that's cost competitive, from energy on through materials and others. And so it's a question of scale and putting it to work. So on the engineering side, if you will, it's there. Secondly, in terms of finance, absolutely, this has become mainstream. And, to be candid, the financial sector sees a huge commercial opportunity because this is what people want. Now climate will be one of the core determinants of value in the financial sector, just like credit risk is, or interest rates, or where currencies are going. And that changes the game entirely. And then the third issue, and this is the one that's not absolutely settled, but is the political consensus coming together. And what I really mean is the social consensus, which is coming, is I think arguably here in most jurisdictions, but that being translated into policy. And that is, that's the challenge. That's part of what a successful COP can make happen, because you're doing things together. And that was the dynamic that was created for Paris, which was a success, without question, in my view. And that is absolutely the intention of the UK in partnership with Italy for Glasgow. And we've got a lot of allies in that.
Great.
Excellent. Ending on a hopeful note there. I guess the one last thing I wanted to bring up is the point about voluntary carbon markets. Mark, I know you're working on this. Can you just give us end us off with that summary of that work?
Yeah, very, very briefly. So earlier we were talking about net zero, and so this is part of the net in net zero. Some of it will be technologies, carbon capture, storage, and use, but for a period of time, there is a role to be played with so-called nature-based solutions. So think planting new forests, not existing forests, but new forests, which act as natural carbon sinks. There's other natural carbon sinks, as well as offsets from converting existing dirty power, for example, into clean renewable power. But the markets that exist to pay for those are very immature. I gave you a bunch of numbers in the trillions. I would spell trillion with an M for these markets today. In other words, it's only 300 million of trades last year, which is nothing in financial market terms. It should be in the tens of billions to the hundreds of billions. Last point. So in order for that to happen, There's a huge working group of the private sector has just been struck under the leadership of Bill Winters, who's the CEO of a bank called Standard Chartered. One of the former commissioners of the SEC, Annette Nazareth, is co-leading this, and they're working on a blueprint for this market for the world, and looking to unleash that at the start of next year, early of next year, so that we can get going on this market, so the private sector can get going on this market by the time of COP in November 2021.
Great. Mark, thank you so much for joining us.
Pleasure.